China's AI quartet walked through the valley of death. China's leading artificial intelligence companies are facing for public share sales even as investors' appetite for new issues is waning, making it harder for them to generate fresh funding to sustain growth. The road to initial public offerings, IPOs, has been rocky for the country's largest AI enterprise as the trade and technology face-off between China and the United States complicates their prospects. Broader market volatility and investors' loss of patience with the new technology's commercial outlook also pose challenges. SenseTime Group, Magvii, ColudWalk Technology, and Yiyu Internet Technologies are the early leaders of China's AI industry and are known as the AI Quartet. Specializing in facial recognition technology, the four account for nearly 60% of China's highly competitive AI machine vision market. Their products are used in a wide range of applications including smart city, security systems, mobile phones, autonomous driving, logistics, online healthcare, and financial services. The market has long expected the four companies to debut on public stock exchanges after they depended for years on private fundraising, but now those funding sources are drying up even as their need for more cash continues. Risks associated with the quartet's narrow business model and continued operating losses suggest that IPO investors may balk at paying share prices based on the private market valuations. Some players did make progress this year toward public share sales. In July 2021, ColudWalk, a state-backed AI unicorn, cleared regulatory reviews for an IPO on Shanghai's Nasdaq-like Star Market. The approval came after 3 rounds of regulator inquiries since the company filed its application in December 2020. In September, Magvii also won approval for a Star Market listing after a failed attempt to sell shares in the United States and Hong Kong. Alibaba-backed Magvii landed on the Trump administration's trade restrictions blacklist in October 2019, barring it from doing business with American suppliers. SenseTime, China's largest AI company, which reportedly has been preparing for a public listing since 2017, filed plans for an IPO in Hong Kong in August 2021, but Yiyu halted its Shanghai listing plan in June 2021 after the Bourse regulator demanded that it provide more business and financial details. Yiyu filed its listing application in September 2020. Current market conditions are adding uncertainties to the quartet's share sale plans. The AI leader's push for IPO fundraising continues regardless of the market conditions, a person close to Magvii said. Despite the unfavorable situation, AI companies are in urgent need of tapping the stock market as fundraising from private equity and venture capital funds becomes increasingly difficult, a brokerage source said. The AI quartet were darlings for private equity and venture capital investors since their establishment. Over 8 years, the four companies raised a total of 50 billion yuan, it's $7.8 billion from such funds. Their combined market value soared to more than 140 billion yuan. But the companies are still running up operating losses. In 3 years between 2018 and 2020, the four booked total losses of 13.3 billion yuan, equivalent to 85% of their combined revenue. Based on their IPO prospectuses, every 1 yuan of income generated by the companies over the past 3 years, they spent 1.81 yuan mainly on labor. The companies push for public share sales. Questions over their capacity to control costs, expand their business scope, and generate new profit sources mounted among investors. Several stock market investors on the mainland and Hong Kong were concerned about excess valuation of the four companies. Doubts over the AI enterprises provide a snapshot of challenges facing the nascent industry. Investors' enthusiasm for the industry started weakening in 2019 as companies failed to deliver satisfactory results. Investors are only becoming more rational about the industry. In November 2022 report, Research Institute IDC forecast that China's AI market would grow at an annual rate of 23% to reach 11.9 billion by 2024, down from its projection a year earlier of $12.7 billion. In 2020 speech, Yin Qi, co-founder of Magvii, said China's AI companies have entered the so-called valley of death phase, referring to the period in the life of a startup when it has begun operations but has not yet generated revenue. Yin said the period could last 18 to 24 months before competitive players achieve sustainable growth. AI companies are experiencing a development bottleneck and fail to meet investors' high expectations. Unachieved technology breakthroughs in algorithms, limited business applications, high labor costs, and ethnic concerns all pose challenges to AI companies' business models. Startups must survive the valley of death before a business takeoff. Companies are working hard to survive, and their exploration of standard and large-scale production solutions has led to massive costs, said Li Lun, an AI expert at the China Academy of Information and Communication Technology. But these are the problem at a specific period and stage. Heavy business spending has increasingly burdened AI companies. The quartet's outlays on research, sales, and management between 2018 and 2020 was 1.35 times total revenue. Labor costs accounted for 75% of revenue, company financial reports showed. Each company has a large team consisting of thousands of people. SenseTime, the largest, had a workforce of 5,300 as of June 2021, while the smallest, Yiyu, had 1,700 employees. The huge workforces reflect AI companies' challenges in producing universal technology solutions for different customers. Most of the people serve certain customers and spatial demands. Whenever there is a new order, the workforce will grow. AI technology is still at an early stage and is designed for specific applications. The simpler the application scenario, the better. There is a still long way to go in a research to make the technology more widely compatible. The industry has realized the urgency of reducing costs in response to securities regulators' inquiries. Yiyu and ColudWalk pledges to significantly cut spending to turn profits within 5 years. Yiyu said it expects to turn profitable by 2025 if it can maintain 35% annual revenue growth while reducing expenses 4 to 3%. ColudWalk said it would make money by 2023 after cutting costs by 60%. A more crucial task for AI industry leaders to survive the valley of death is to create more standard and more broadly compatible products to save costs. AI companies are like apprentices who have paid heavily for knowledge they learned. Only when they can repeatedly put the knowledge into practice can they make money. The AI quartet are in urgent need of finding new revenue sources after they came to dominate China's machine vision market. The technology's application is security, smart life, and other areas has reached a bottleneck, and the companies need another track of growth. The search for new business drivers requires funding support, forcing the companies to seek IPOs, he said. With advanced facial recognition technology, the quartet has become the main supplier of security systems for urban management, airports, and traffic, among others. In 2020, security-related business accounted for 98% of Yiyu's revenue and more than 60% for ColudWalk and Magvii. SenseTime hasn't released financial details. The over-reliance on a single revenue source has long been a concern for AI companies' growth potential. Since many security projects are funded by governments, AI companies' businesses are often affected by government budget plans. All four of the leading players have actively searched for new business directions in recent years, seeking to provide technology solutions for healthcare, logistics, and autonomous driving. However, progress has been slow. The AI companies are still developing applications in a relatively narrow space with a ceiling in sight, but new areas haven't been found, one industry investor said. More competitors are joining the game as technology barriers shrink, further squeezing the AI companies. In the security sector, surveillance camera producer Hangzhou Hikvision Digital Technology has become a big challenger as it invests heavily in its own software development. Internet giants like Alibaba Group and Tencent Holdings have also tapped into AI businesses with heavy investments. China's tightening oversight on privacy protection also posed new challenges to the industry. Earlier this year, the Supreme People's Court issued new guidelines governing the use of facial recognition technology and data collection, while several new laws and regulations concerning privacy protection were issued with stricter requirements. Whether the Chinese AI giant's high valuations from the private equity market will be acceptable to stock market investors remains a question as they move toward public offerings. Between 2015 and 2020, SenseTime completed 12 rounds of funding totaling $5.2 billion and pushing the company's valuation to $13 billion. Magvii raised $1.35 billion since its establishment in 2011, putting its valuation at $4.1 billion. ColudWalk, which is valued at about $13.6 billion, has raised 2.69 billion yuan since 2018. Yiyu raised $560 million and has a valuation of $3.35 billion. A fund manager said that since most AI companies are still operating at a loss, investors are likely to value their shares based on price to sales (P/S ratio). SenseTime's stock market valuation may range between 30 billion yuan and 76 billion yuan if calculated with a P/S ratio of 10 to 25. That would be below its current $13 billion valuation. Compared with other tech businesses, AI companies are still in the early stage of growth, but the technology will undoubtedly become a crucial force to drive global industrial transformation.